Good morning. This is the weekend update for Saturday, April 13th. What can I say? Friday, another one of those really boring days where we had bad economic data. The market sold off 80 points. Nothing actually moved higher. And by the end of the close, we almost closed green. Just an absolutely frustrating rally. We've got the S&P 500 up 11% so far this year, and just to put that in perspective, that is greater than the average best gain of the S&P 500, the historical norm for the year, and we're already up it in the first quarter. Looking here at the Dow daily chart, you can see we look like we are potentially topping out. If we look at the Dow transports, you can see that we continue to put in lower highs and lower lows on the Dow transports. And as I've been saying repeatedly, this is the indice that we really need to pay attention to because it's been a leading indicator both up and down for the overall market really since the November bottom. And you can see even stochastics, we have lower highs. We are potentially looking at a positive MACD cross on the Dow transports. And I mean, even just look at the up-down volume action over the last month. You can see it's predominantly sell volume, even though we've continued to tick higher. Looking at the 15-minute chart, you can see after that huge rally we had in a select few Dow stocks that the Dow is consolidating right up here and potentially trying to break out of a flag. I mean, if we were just to step back and look at the charts, we've got RSI looking like it wants to uptick. MACD looks good. Stochastics look good. I mean, this chart suggests that we should pop higher, but it is a very annoying, a very frustrating market where it seems 90% of stocks do not do anything. One thing to keep in mind, I went all cash going into the weekend. Really fed up with this market. Do not like the action. Feels like we're trading just to trade, and an environment like that is not a good environment to be trying to chase plays. Going to be gone for a couple of days next week, so Monday I'm going to be looking just to be scalping positions, not really looking to go long a whole lot of things, and we really need a sell-off is essentially what we need. Now let's look at let me go into a tighter view here. This is the NASDAQ bullish percent index, and we mentioned this a couple of months ago. The market has had a tendency over the last few years to top out this time of the year and have a significant sell-off. Now, this index kind of marks exuberance in the market, and right now, if we go back to that chart I had before, this 60 to 70 point area has been a major danger zone over the last decade. So keep that in mind. We also have a history of big sell-offs this time of the year. And, with the really crappy trading action I'm seeing in so many stocks, if we see any sort of downturn in the larger cap stocks, all these smaller stocks and the majority of stocks that have been dead could see the rug just pulled out from them as traders just run for the exit. So that's the risk we have to keep in mind out there. And the other more frustrating part is, well, why aren't you shorting stocks on these moves? And look at Friday's trading for an example of the reason why. Market looked like it was about to roll over. We were down 80 points. And what happens? We end up almost flat on the day, and really over the last 3-4 days what we've seen happen is if the Dow is red, we're down 40 points, we're down 60 points, and within 2 seconds the Dow gains 30-40 points just like that. Not conducive to both longs or shorts unless of course you're playing those really boring stocks. Russell looks like it's trying to top out. I mean, I'm as frustrated as you guys right now with this market and just the lack of action that is out there, even with us hitting all-time highs. Now, this upcoming week is a huge week for earnings. 74 of the 500 S&P 500 companies report earnings in the upcoming week. Friday, we had a couple of banks report earnings, sold off, popped, and then sold off again. So it's going to be interesting to see how the market reacts to the earnings report. Of course, we had bad economic data on Friday, retail sales, less than expected, but the market just shrugged it off like it's been shrugging off things over the last really couple of months. But, hopefully what we really need is a large explosion to the upside where everything participates on heavy volume. We need the retail guys in this market. Or we need a decent-sized sell-off. If we go back to the Dow daily chart, decent-sized pullback, back to the 50-day moving average or even back down to the 14K level, that could bring some nice buying into stocks. But, up here in the nosebleed, very hard to decide we are overdue for a significant retrace. This is the time of the year that it tends to happen. I'm being very cautious right now just due to the lackadaisical trading we're seeing in so many stocks. But anyway, let's go over a couple of chart plays that we were in from last week. CPRX, really, really slow. Needs a break above 50 cents to get any sort of mojo going. We are potentially looking at a positive MACD cross, and stochastics does indicate a possible bounce this week, but we have been disappointed already in nice chart setups, i.e. BLDP with a nice trend that we've had work really well over the last year, and it failed here. Very disappointing action on BLDP, and really just symptomatic of how bad most stocks have gotten in this market. We had a breakdown under support triggering stops on Friday, and just really disappointing. It did hold above the 200-day moving average, but if it fails to hold that level early next week, it could do a full retrace back down to the 70 cents areas, which is just absolutely remarkable. And like I said, just exactly how this market has been over the last couple of weeks. JOST was unable to continue to break out. They report earnings on Monday. I have not seen, rarely seen a rule of two stock not actually work out, so we could see a pullback to the 20-day exponential before it explodes higher again. Earnings on Monday, they've been reported profits the last 4 quarters. Their same-store sales suggest that they're going to post profits again for this upcoming quarter, and that may be the thing that sets it free for that run to 220, so keep an eye on that one. Another potential rule of two stock to keep an eye on next week is ATHX. Got all the way up to $1.99 on Friday before retreating, and could see a pullback on Monday back to the 175, 180 level. I'd be watching this one very close for a break of 2. If it actually consolidated a couple of days before trying, it may end up having a better shot of one of those one-day pops to 210, 220. So definitely one to keep an eye on for next week. TXCC, consolidating down here around the 44 to 46 cent area. 51 is the breakout. We did get a positive MACD cross on Friday. Stochastics trying to break up through 20 and RSI under 30. But like I was talking about in the chat room right now, chart setups like this with stochastics under 30 and curling up. Stock after having a significant sell-off looks like our January popper kind of charts. A positive MACD cross. Stochastics under 20 and curling up. 9 out of 10 times I would be all over this stock drooling going, we are going to make fat money. But the way this market has been recently, it's hard to know. It's just not a normal market. What would probably happen on this stock is it would get news, open at 60, traders would chase it at 80. That's just the kind of crappy market we are in right now. One last mention to keep an eye on next week. BCRX had a big pop on Friday. It seems the China bird flu story is not going away. There's reports out Saturday that it's spread to Beijing, 1 or 2 cases. So we could see some action in the bird flu stocks on Monday. So that's the area we're going to be looking at. Of course, our favorite play in this sector is IBIO. Would be a great pickup around the 55 cent and under area, waiting for the momentum to build. But the other players to watch, of course, are NVAX, which, funny enough, pulled back on Fridays. Of course, I know that's actually put in a nice little bounce over the last few days. It topped out on Friday. SVA is another one. Vickel. And PPHM. PPHM actually looks pretty decent here on the chart. It's got a nice little symmetrical triangle. It had issues breaking 140. 145 would definitely be a buy. This is a stock that you think it's going to go one day, it doesn't, and then the next day it goes boom. So definitely keep an eye on this one on Monday for possible momentum on, if the bird flu story does pick up and we continue to see action in BCRX. So that's it for the video. Again, this is a market where I believe the best trade at the moment is no trade or reduced position sizes. I believe we need to be 90% plus cash overnight right now till the trades start to pick up and we start to see some better actions in stocks. I believe we are on the cusp of a potential pullback, but this market has been on the cusp of a pullback for the last several weeks and continues to move higher, but really do not like the action I'm seeing out there, so erring on the side of caution right now. So that's it for the video. If you've got any questions, shoot me an email, feedback, buysellshort.com. Have a great weekend. See you on Monday. Bye.